who's buying this particular dip? We've been dipping all of November. We got to the last week of November here, the first day of this week. It's a short week. We've only got 4 trading days. Thursday, we're closed. Friday, the market closes at 1 p.m. Eastern time, a short day. And we're seeing some advancement. You can see that advancing stocks versus declining stocks had a huge jump today. It got all the way up to 6. Means that there were 6 advancing stocks for every 1 declining stock, which meant the markets had a reversal. And so we should get pretty excited because we got to figure out what's going to happen in the month of December. Are we going to get that Santa rally? Is this the turnaround moment? Well, we've got to put that bullishness of today into context for the week and for this moment and for the rest of the indicators that we need to look at. And what the problem is we have right now is even though we saw a ton of advancing stocks today and we saw some relief from this downturn, and we're seeing companies like Meta turn around and SPY had a beautiful day, the fact is they're doing it on an extremely low volume day, on an extremely low volume week, which means a lot of Wall Street sold last week. And the answer to that question is yes, whenever you're looking at volume, if the volume is low, it means that institutional money, or as they refer to it as that smart money, isn't the ones buying up the market right now. Now, here's the big deal. If they come back from their week-long vacation and they go back to the business that they had been in for the first 3 weeks of November, well, we know that that was a bearish business because when you go look at the SPY, and I'm going to take you into the SPY today, when you look at last week's volume, that was really high volume, okay? It's a huge red volume node at the bottom of the chart. And it's so big and it dwarfs the previous weeks, not just the weeks of November, but all the weeks of October and September. And it tells you that smart money was definitely not taking a little break from buying, but they were actively selling, and it was clear-cut distribution. So the first part of this video sounds pretty bearish. However, the good news is that we haven't broken critical lows, but perhaps the bad news is that we still got to fight through some resistance and selling pressure before we can prove that we're going to continue to make a new high. So welcome to Wall Street. This is the Stocks with Josh show. I'm going to be very short and concise and go through some price structure, momentum, and volume, the PSMV for the SPY today, and I'm going to go over a big tech stock that I think looks favorable for the time being, which means that it'll probably go up through the rest of this week and possibly the first week of December before we get the test, which determines whether or not it's going to continue that trend to the downside or whether Wall Street decides that they're going to buy back in because of positive expectations for Q4 earnings and some better data that might come along. Price is truth, and you want to follow the charts, not try to guess what the next candle color is going to be, but you want to look at the overall. The word is confluence of what the market's giving us, because you can determine whether or not smart money is getting in simply by looking at volume. And you can find a great place to buy by looking at structure, because if volume buying comes in at support, well, that's structure holding. And if we bounce at certain levels, then it tells you that we have a high likelihood of returning back to the highs. And so I'm going to go through a couple important stocks with you guys today. Thank you for joining me. Thank you for watching the video. Happy Thanksgiving week. I hope that in addition to making some money on Wall Street this week, you also get a little rest and get to spend some time with some loved ones. The market only has one assignment this week, and that's to not print a bearish engulfing monthly candle on the month of October. So far, we are not in that stage, but I'll show you those important levels here. Let's take a minute and dive into the SPY. We're going to look at the price, the structure, and the momentum and the volume and see what that story tells us. All right, I'm just going to point out a couple simple things. We've got the 50-day moving average here in red. That price has fallen below. It tested it once, it got rejected, and now we're testing it again. I have marked on my chart the ominous level of 666, and I would suggest to you that the most important thing the market does this week is to actually close above 666 and the 50-day moving average. That would be a very bullish tone going into the month of December. The market doesn't go bullish again until it gets above 685. So this is all going to be potential chop in which the market can go either direction because the market does not return to a bullish stance until it gets back above 685. If it closes on the daily time frame back above 685, then we move on to make brand new all-time highs all the way up to 700. And similarly, if we end up closing this week out under the ominous number of 666, our immediate target is to go back and test 650. And of course, if we can't hold 650, then we get to 636. Now, 636 would define that the market has fallen completely into a clearly defined bearish trend, and this would no longer be a shallow pullback on a up move, but below 635 would be a shift in the trend going from bullish to bearish. Now, on the daily, weekly, and monthly chart, there's quite a bit of concern. On the daily time frame, you can see on the MACD that we have printed a sell signal with both the blue MACD line and the signal line beneath the zero. That is a classic sell signal. On the RSI, we're beneath the 50 level. We're coming back and testing it today. But if we do not close decisively above it on the daily and weekly time frame, it means that we are in the camp of the bears. And so even though we have enjoyed a nice little move up here off of the lows, that hasn't changed the overall story or the trajectory of this market just yet. If we jump to the weekly time frame, I want to point out a couple of very bearish things. On the weekly time frame, you can see that we got this cross down on the MACD on an elevated MACD, and we've gone from printing a green histogram to beginning to print a red histogram, which often means that we're going to see some additional downdraft. We are still above the 50% level on the RSI on the weekly time frame, which means that the bulls are still in charge of the overall market. It is yet to get turned to the hand of the bears. The most important thing that we can analyze on the chart this week is last week's red selling volume. It was huge and it overshadowed all the previous volume nodes. And so far, this volume does communicate that smart money was getting out, not reloading. And we've got a very small green node here at the bottom because we're in a holiday week. So I'm not expecting this node to green and dwarf this node. But in essence, for this market to reverse, that's what would have to happen. So some people would be hearing right now that I'm only bearish, and that's not the case. As I think the market's going to run this week, we're going to continue on low volume, and we're going to continue to kind of push higher and test some highs. The market's really not going to see a ton of volatility and a ton of selling pressure or a return to selling pressure until we get into next week. This is really a week that barely counts. I sometimes come out and share in videos that a week is the most important week on Wall Street because it's pivotal, because we're looking for a catalyst or data. Guys, that's not this week. This week is a low volume week. We're getting advancers and green candles and price action moving back up. Unfortunately, I would love to tell you that it means the markets have reversed and are now going to come off their lows. But until volume begins to show up next week, we don't have a confirmation of that. But is there some way to make some money this week? Absolutely, yes. For one, I want to shout out the Stocks with Josh Discord, my pro trading community, my A+ scalp setups. I provide those half an hour before the market opens each and every day. And I teach you how to take them on the weekends. And if you take the cross of price, for example, today, as we moved above my breakout zone, you can see that we continue to climb and hit up targets throughout the day. So if you want to get my setups and you want to trade alongside me and learn the charts, then check out the Stocks with Josh community. You simply go to my website, which is the same name as the show. It's www.stockswithjosh.com. Okay, I'm going to give you guys the pick that I like the most for the market environment that we're in this week, which is a market environment in which we're coming up off the lows and we're likely to go back and test resistance before potentially the next leg down. But of course, if we get up to those levels where we go to test resistance, and then all of a sudden that's when institutional buying shows up and we get a huge green volume candle, well, that would change the story and it would show us that even though smart money was tardy to the party, they did show up and we end up getting great prices. But if we see that the price action gets smacked down at those critical resistance levels, then it means that this is not a market that's ready to go back up. In particular today, I want to talk to you guys about Meta and give you a fresh view on that. I'm going to show you the chart. And we're going to look at, of course, the PSMV score. I'll tell you right off the bat, it's still a 3 out of 10. And the fact is that we know that Meta's been in trouble for a while, but in this environment, we can float back up and retest resistance. Let me show you guys what that would look like. First thing I want to point out in the PSMV is price action. The price action has been terrible. We have been going straight down. And even though we've gone up a little bit, this could be argued by many that it's a dead cat bounce and a stock that you really want to stay away from. However, we're going to look at not just the price, we're going to look at the structure, right? And the structure right there is that 600 is a key psychological level. And at the time being, it's holding. I want to point out that 600 has got a down arrow on it. And so if you take any risk on Meta going into this week or the month of December, you could treat this $600 psychological level as an ideal area to consider a stop loss. I would not advise that you get in and hope for the best, because if we lose 600, the target beneath that, the next structure level, is going to be down here at 545. That's where a significant level of structure exists after 600. So now we've looked at price, now we've looked at structure. Let's go look at the momentum, the MACD, and the RSI. On the MACD, even though we have a partial sell signal here with the blue line crossing beneath the zero, which is very concerning, the fact is it's beginning to curl up. And the last time that we came down and got the exact same thing, the blue line crossed beneath the zero, printing a sell signal, but then it crossed back above the orange line, which is the signal line, and that produced a secondary buy signal that gave us a brand new all-time high. So if this continues to curl up, we're going to be looking for that potential buy signal where we could get another move back up and potentially go as high as 660. So momentum is in an indecision zone. It's not in the hands of the bulls. It's really halfway in the bear camp and halfway in the bull camp. And we're watching for a curl up. And here's where the momentum story gets a bit more interesting, because we have made a double bottom for momentum on the RSI. And the last time we got down to this level, this is an area where the price reversed and we continued higher for the next couple weeks. So on the daily time frame, we've crossed above the 9 EMA today. And if we close above the 9 EMA, well, then we have put a pause on the current downtrend. And the big test is going to come when we get to the 20 EMA, which aligns with this 636 level, which was a breakdown level that we saw before. I want to make it very clear that the price has got to get above 660 for Meta to become bullish again, even as high as 670 as an area of confirmation. 660 would be the earliest stage of a possible upward reversal move. But right now, my main target on Meta going into this week and in the first week of December is a back test of 636. So we are potentially in the midst of a shallow rally till the end of this month. And if for some reason we don't get that on the monthly candles and we go back to having a bearish engulfing candle on the S&P 500, then it absolutely, from my technical analysis, confirms that we're going to have a very rough December. Now, before I leave you guys, I want to answer the question, if we do rally this week, could we then fall into a Santa rally in the month of December? You're going to begin to see people talk about the Santa Claus rally, and I want you to know they all misuse that concept and that idea. The original Santa Claus rally was a technical analysis that specifically looked at the last handful of days after Christmas and the first couple days of the new year, where again, volume was often extremely light and most of Wall Street was away and the markets would drift higher. It's an area very similar to this week, Thanksgiving week, that the market turns to, especially if it had been in a downdraft. It often finds relief during that low volume period like we're seeing this week. And so don't get fooled by people talking about a Santa rally that starts in the first week of December, because that doesn't exist. It's not a technical thing or a technical pattern. It's just people getting colorful and hoping for the best. We'll leave it there. Thank you guys for joining me today. Happy Thanksgiving. Peace and blessings. I'll see you in the next video. If you need better trading tools, check out this limited time offer from the Moomoo investment app, where you can get up to $1,000 of NVDA stock just for making a deposit. Plus, they're offering 8.1% APY for your uninvested cash for the first 3 months, and 4.1% after that, which is still better than most banks. So your money is actually working even when you are not trading or even looking at the app. Now, I'm going to show you guys some features that I really like about Moomoo. I've always enjoyed these features. Let's go look at them. I'm a huge fan of their earnings calendar. When a company reports, you can just tap the earnings tab to get all the important data. You're going to get the revenue, the earnings per share, as well as the latest company news all in one place. And then there are the zero commission fees on U.S. stocks, ETFs, and options. That's not the case for every popular retail platform. Whether you trade every day or you just simply check on your investments, every once in a while, you pay no hidden fees. Check it out on their website, read the fine print for yourself, and consider whether or not Moomoo is right for you.